Hey everybody, this is Jose Blasco. I was just talking to myself because I was muted. Sorry for that. It's time to get started. Please, can I have a quick sound check and get confirmation on the chat box that you guys hear me? That would be great. I believe all is good, but again, that confirmation is important for me. I will turn on the video stream, put myself here on this corner. Hello everybody, good to see you. How are you, Jeff? Good to see you. Ahmed, nice. Mark, very good morning, everybody. Yes, Maka, Clive, wonderful. Everyone, everybody, perfect. Yes, wonderful. So let's get started. Welcome to the session, everybody. My name is Jose Blasco. This is October 28, 2021, and this is Options with Options. So as the name suggests, we're going to be trading options. Before we get started, financial disclaimer on the upper left side of the screen. Please read it carefully. This is important information, so please do not skip it. Read it entirely. I am counting on that. Mark, I talk to myself all the time because I am alone. Well, it's a good way to keep yourself entertained and double check, your actions. Good to see all is good, Jeff. Wonderful. Perfect. So here was the disclaimer. And when it comes to agenda, we're gonna look at the market environment. From there, we'll look at the trades that we have super quick because we spent a lot of time with that yesterday, which was important. And then we'll get into finding opportunities and hopefully execute as many as we can, as long as they meet our rules. So let's begin. Let's go for it. And I will go ahead and close this introduction slide so we can get started. And as always, I almost always forget to talk about the question page. So the help page maybe could be a better way to call it. So anyway, so how do you access the question page? You use tradewithufos.com followed by the name of your instructor. Could be /Jose, could be /Becky, /Boyan, /Pedro, /Reynaldo. You name it, any of your instructors, you can use their name, and you end up in the same place really. So you have this page here where the important section, as you may have seen in prior sessions, is the have any questions section, where you can post your questions by specifying a title, a description, importing pictures of your charts and so on, so we can look into the question properly, and you click submit. And then you will get your answers here below, which, by the way, as this is growing, because we started with this page not too long ago, as you know, so as this is growing, you guys will be able to come in here and type anything you want to talk about. Maybe you are wondering about EMA, so you can type EMA, and then if there is any prior question that talks about EMA, they would show up, and you can just go ahead and take a look and read. Okay, so this is indeed something that is very useful, and I would like to welcome you to use it. While you are indeed welcome to send us emails as well, which is fine, but I believe it's a bit more modern way to interact when it comes to questions and answers instead of just a static email. Okay, but again, what matters is that you guys do your job, do your practice, put your time and your effort, and we are here to support you in any way we can. So if you prefer to use an email, go for it. Again, my recommendation, use that page. So let's begin. Let's begin with the analysis of the S&P and see what we have. Amazing moves. The S&P is 0.77% up. Again, yesterday it was looking like, with this pretty strong drop in price, it was looking like, the end of the climate was coming. The climate was supposed to last by 5 candles. Today is candle 10. So really, this is a very stretched climate. Not only that, you can see how the ATR spread was going down yesterday, meaning that volatility conditions were changing, probably to the opposite direction. And today we are back to more volatility to the upside, pointing at 1.27, which is again greater than 0.99, which represents 2 standard deviations of what we call max distance. So that market is overstretched no matter how we look at it. But while that's the case, okay, and again, probably the reason why that's the case from a technical standpoint, it's because on the weekly time frame, we are in the beginning part of a weekly climate, okay? On a weekly time frame, we are hitting 112, which is not hitting the 126. So in other words, there is some, energy there in that time frame, which is probably contagious to the daily time frame, and that's why we see such a spectacular move, okay? In any case, while this is happening and statistics and everything would suggest the market is going to reverse, I mean, odds are for the market to fall, even though today it's the complete absolute opposite. The reality is that when we look for what's happening behind the scenes today, we have a much greater difference between the implied volatility, the real-time continuous implied volatility for the calls and the puts. The blue is the calls, the gray is the puts. Yesterday, they were actually at some point during the day, they were exactly the same value, 11.33. And notice how the call side today has increased all the way to 12.64. So if we look at the volume map, okay, you can see how very short term, okay, like looking at November 1st expiration, because of course with the S&P you have monthly, not monthly, Monday, Wednesday, and Friday expiration. So very very short term for Monday. So it's kind of flat, but then as you go further out in time, all the way, if you go to 8th of November, which is like a little bit over a week more than now, you got a ratio of 2-to-1 for when it comes to calls against the puts. So again, you can see how from behind the scenes bullishness is coming in. Okay, we can see on the 3-day average as well as the 5-day average, we can see the call, the blue line, okay, the calls above the puts. So there is a lot of bullishness coming in from behind the scenes. Now the thing is that from a statistical point of view, the market is set to correct. But it seems that if the market is going to correct, it doesn't look like it's going to be too deep as a correction. Okay, so we may see that correction happen maybe early next week, and we get to see a couple of 2 shy candles to the downside and back again to the upside to continue with this directional move to the upside. Okay, so we will obviously be observant and react to whatever the market has to say. But when it comes to planning trades for today, well, the same thing I said yesterday applies, which is really anything could happen. This market just could keep going higher because this impressive strength, which could be coming from the weekly time frame and the fact that we're making all-time high and all of those things, and then the market just may just keep continue for a bit more, even though it's not likely, but it could. In the opposite is just as true, which the market is in a situation where it's more likely going to retrace than not. So again, my approach to looking for trades is going to be just like yesterday. In order to manage my portfolio, I would like to find longs and shorts both and add both to my accounts to be able to position myself in a way where I am long gamma. So if the market is going to start moving higher, yes, I would lose on the shorts, but at a decelerated pace, where if I profit on the longs, I would profit on the longs at an accelerated pace. And thanks to the positive gamma, that will overall pay in the account. So that's going to be my approach today. So when looking for trades, we'll start with longs and shorts. Again, the other reason is because while non-directional trades certainly would be welcome, and for sure I'm looking for that as well. But notice how we are dealing with 16%. It's a little bit higher implied volatility compared to yesterday. Why? Because we had this intense drop yesterday, which is what really created that spike. So there is a bit more premium, but it's not like there is that huge amount of premium in the options. So I won't start looking for non-directional opportunities. I will start looking for directionals, long and shorts. Okay, that's going to be the plan for today's session. Any question, guys? Let me know on the chat box. If you have no questions, sorry, I'm multitasking, so not the best. So if you don't have any questions, so then just type in the chat box if all is good. Quick okay would do, but at least I know you are with me on the plan and the expectation for today's session. To review speed of the light, the position we will have on October 29, Colgate Palmolive will expire tomorrow. So we talked about this yesterday. I'm not going to add anything because it's what it is. Pfizer, there is nothing that new compared to what we discussed yesterday. Why? Because take a look at the chart and you will understand why. So this market, if we look at the 2-day time frame, compared to yesterday, is 0.79% higher. And if I am not mistaken, I left, or actually that was for KBH. Yes, sorry, I got confused for a moment. Yeah, so for this trade, basically, we are in a perfect world, we will see that stock rally towards 48, which is the target. That would be ideal. Probably is going to be less than that because of the amount of time to expiration, which is November 19. But here there is more time. So this trade, I won't comment on it. We will just keep reviewing this trade into next week, but not today. And KBH, that's the one I wanted to comment. So KBH, here we go. So with KBH, okay, so what we have here is we have a bear put spread. We bought the 39, we sold the 33 put. Yesterday, we managed to close this 33 put at 5 cents. So in other words, I didn't actually update my position quote window there, but let me do that very quickly. So I'm just going to edit what I had here. I'm just going to pretend the position I bought, which cost me 210. Okay, I'm going to pretend that cost me 25 cents less, which 25 cents less is 30 cents minus 5 because we closed this trade yesterday. Sorry guys, I was turning on the calculator. Not sure what. Okay, now perfect. So sorry, let me rephrase that. So we sold the 33 put at 30 cents. Yesterday we closed at 5 cents. So it's like we netted 25 cents on that. So since the original option that we bought was 210 minus 25 is like we bought this option at 185. Okay, so if I get rid of this, okay, and I just leave my 39 put at 185, so basically this is the type of trade that we have. Okay, so I'm just gonna copy this position. Okay, I'm gonna copy this position and put it right there, right under my original KBH. Okay, so you can see the PNL is the same, and the question is, what can we do to that stock? And it's not a very good news what I'm gonna have, because we need that stock. If you recall, we needed that stock to fall lower, and yesterday it actually went lower, but then today it's going back higher. Okay, so basically we are more or less where we were yesterday, and if you recall, yesterday I was not getting premium enough, so I would expect today to still be in the same position where I'm not getting premium enough. Okay, but in any case, let's go ahead and evaluate. So first, I will uncheck everything so we understand the position we have, which I'm just going to edit. We just said is 185 because we managed to close the 33 put. So this is the position we currently have. Okay, so buy the 39 put at 185. This is the current position we have. This position has a risk of 185. So the question is, what if we do this? Okay, and if you recall doing this, which was the second case, let me simplify it now that I close the 33 puts, so I can get rid of those two 33 puts. And basically, if you see what I'm doing here, I am butterflying. So the 39 put, I'm selling the 37 put, which is 2 strikes below, 2 of them, and then I'm buying the 35 put, which is 2 strikes below the 37, and I'm buying 1. So if I do that and I click OK, I end up with this orange risk graph where the maximum risk of the trade now is 160, right, instead of 185. So there is a little bit of a benefit. Okay, there is a little bit of a benefit. And if the stock goes down, so there is a moment in time where this trade will become profitable. A maximum, the most you can make there, okay, is not a lot, to be honest. Okay, if I look at the peak of that triangle, which is the orange value, you're gonna make $38. Okay, but there is a little bit of a possibility to hopefully make some money. Now, notice that if you didn't do anything, instead of $38 on expiration, you would make 13, right? So I am seeing this change as providing a little bit of a benefit today. Okay, I thought it was not going to be that amazing, and to be honest, it's not that amazing. But yesterday, actually, we didn't even have that benefit. If I recall correctly, the whole orange graph was under the zero line, if I'm not mistaken. And the reason why it was under the zero line is because we could not manage to get enough premium because the price of KBH was higher. But it seems that because it went down and the implied volatility went up a bit, it seems that today we are creating a little bit of a benefit. So basically, this is kind of like damage control mode where instead of losing 185, we may end up losing 160. It is not very likely we're going to reach that peak, okay, which is reaching 37 on the way down. It is not very likely. Notice that that peak is beyond the purple line. where the purple line represents a 1 standard deviation of price movement, meaning that reaching 37 something is likely, but reaching below 37 something all the way to 37 is less likely. Okay, so this trade is looking like it's going to be a full loss, and therefore reducing the risk from 185 to 160 is something I am open to do. Yesterday was not looking good. Today is looking weak, but there is a little bit of an improvement, which I am considering. So now, what if instead of 39.37 I was to do 38.37? Okay, what if I was to do something like that? So what would happen to this trade? Well, now I am fully under the zero line. Okay, I am fully under the zero line, even though now the trade has a more reduced risk that drops to 125. But while the risk is more reduced, now it's no way I'm gonna make a profit. And I always like to give my trades a second chance if they didn't work well. So even though it's a very, very shy little triangle popping above the zero line, if I do 39, 37, 35, I am looking at this particular tweak as a better one, because at least I'm giving this trade a second chance, even though it's a very tiny triangle. There is nothing magic, but hey, that's better than the other scenario in my mind, at least based on my trading style. Now, the one thing I could also evaluate is, what if I do 39, 37, and maybe I do 34, and I basically open the door to take more risk to the downside. Let's see what happens if we do that. So if we open the bottom part to be a little wider as a wing, so now I make the triangle to be just a little greater, which that's great. But unfortunately, my risk becomes 250, which is more than 185, and that I don't want to assume. Okay, as long as I can match or reduce the risk and give the trade a second chance, I'm fine. But increasing the risk is something that I'm not open to do. So with that in mind, with that orange scenario, the choice would be to do 39, 37, 35 to reduce the risk from 185 to 160. Okay, but then we had the other possibility. Remember this possibility, if you recall yesterday, that would create negative deltas. Okay, so that would be a scenario where you are still bearish, you are still counting on using KBH as a very weak hedge to the short side, extremely weak. 14 delta is very tiny, but in this sense it would still be short. The other possibility that we explored yesterday, let me go back to my 185 and then remove the 33 puts because we don't have them anymore. So the other possibility was to build the spread going up. So I got 39, okay, and let's go ahead and do 41, for example, which is 2 strikes higher. So 39 to 41, and then if I add 43, so again, I'm doing the same thing, but instead of going down, I'm going up. So if I do that, what's the risk profile? Well, the risk profile is now a risk profile where maximum risk is 170. And now I have this tiny triangle as well, but now the triangle is to the upside instead of to the downside, meaning that I have made this trade to be basically 0.05 delta. It's kind of non-directional. So, this dotted line here is where the value of the stock is. So now actually to profit, you will want the stock to go a bit higher. Okay, that's what we need to happen. So this is not very ideal because their stock belongs to a weak industry. So even though it's been strong by itself, the industry is weak. So we saw the power of when an industry kicks in. And I wouldn't want to be on the other side of that. So I'm gonna try and see what happens if I sell puts a little higher, because that's gonna bring in more premium. So if I do 39 and 42, and then I do 45, right? So what would happen? My risk of 170 becomes 210, and now my triangle is wider, but the risk is more. So I'm not open about that. And therefore, because my priority when I am in damage control mode is to reduce the risk, then my choice is gonna be the orange choice, okay? Where the orange choice is about dropping the risk to 160, given that tiny triangle last chance for this trade. That's gonna be the choice. Okay, so let me go ahead and get rid this one here below. And now I want to copy one more time this trade. Okay, well, actually, no, I don't want to copy this trade. What I want to do is to float this because I am about to place the order using TOS. And I want to make sure that I can go ahead and compare what I have on the screen with what I'm about to have on the TOS platform. Guys, let me know if all is good explained here and how the analysis we did yesterday changed a little bit today because the stock went down. So, I mean, it's a good educational exercise because yesterday it was not working too well. Today is working just a little better because the stock went down a bit. So that helps you to understand the concepts taught yesterday, today in real time, one day after. So let's bring TOS. We're gonna load KBH November 19. Okay, and you know what I need to do in this trade, and that's why I wanted to float top. So I got top on top of TOS here. So I want to build this trade, but remember, the buy 139 put, I already have that. So really the only things I need to do is I need to sell 2 of the 37 and buy 1 of the 35. That is technically a ratio spread. Okay. Yes, Mark, you could certainly wait until tomorrow, and if the stock was to drop more, you will get a better scenario. But what if it doesn't, right? So again, you don't want to trade a trade that you're trading that didn't work the way you wanted it to work. You know, it's like trading within trading, right? So to me as a trader, it feels a little bit like I'm hoping for more. And next thing you know, the stock continues going higher. And then next thing you know, I lost 180, where today I have the opportunity to reduce it to 160, right? So I'm not gonna wait. In my personal trading, I don't wait hoping for something better unless you have rules about it, which is maybe fair enough. Maybe you have a rule that says I'm not gonna tweak my trades unless the decrease on risk is at least 25%. And if it's not at least 25%, to me it's not worth it, so I don't do it. So if you have a rule like that in your trading plan, then fair enough. But in my case, I don't have a rule like that, so I just do the tweak the moment I am sitting in front of the computer screen and ready to tweak. Okay, that's when I do it. So we're gonna do a put ratio spread with a 35 and a 37 put, and therefore on the put side, I'm just gonna right click to buy a ratio where is actually the opposite. We are gonna be buying the 35 and selling 2 of the 37. Is this correct? So let's review. This is when floating the windows is very important. So we are selling 2 of the 37, so minus 2, 37 put, November 19, and then we are buying 1 of the 35, and that's 35, and that's plus 1. So yes, I have it right. It looks like, I can even go ahead and get rid of my 39 put now, so I can look at the real-time available price, which is 25 cents. On TOS, it shows as minus 32 because it's delayed that data in this case. So, again, so I guess that a fair beginning, I want to try 30 and see what happens if I get filled or I don't. And, we'll then document that afterwards. Okay, so let's put that here. Okay, it seems I got filled at 30. So you may be able to get filled at 30. So if that's the case, go for it. Okay, so I'm just gonna re-add the 39 put I have, and I got this one at 185, remember, and then the 2 options I just got, I got the 35 at 10 cents and I got the 37 at 20. Okay, so 10 cents, 20 cents. So this is the trade I got in. Okay, so my risk is actually diminished to 155. I got a little bit better price than what I was expecting. So I went from 185 to 155 risk. That's the decrease that we have achieved. And now I'm just gonna copy this position to the clipboard. so I can go ahead and put that on my positions window under KBH. Okay, so we can monitor that into the following days. Okay, and the Iron Condor with Twitter, we closed that yesterday, so I'm just going to delete it, and therefore I am done with the management of trades, and we are ready to trade now. Let me see your questions. Joanne, good to see you. All good. Maka, how does that work with multiple contracts? Yeah, so everything I do to avoid confusion is times one. So if you're trading two contracts, so it's all times two, meaning that if you sold two of the 37 put, so let's say you are doing two contracts, so then in your case it would be four. I bought one of the 35 put, so in your case it would be two because you're doing double, right? So the whole thing would be double or triple or quadruple. Everything I do is times one. Okay, Ahmed, you got filled at 30, very good. Yes, buy equal amount of long and sell double the amount of shorts. That's how you do a butterfly. You said it perfectly, Maka. Exactly, Joe. You double the recipe. Very good. Thank you guys for the teamwork and your collaboration and your comments, and I love it. So now, let's find some trades. Okay, let's go ahead and find some trades, see what is it that we're going to find in real-time conditions today. So when I bring in the matrix, okay, remember we are looking for directional trades. So we are looking for a top positive CIV spread. That is a bullish component behind the scenes. We are looking for cheap options, so less than 20%. We are looking for groups that are strong in the long term. We are looking for our penny increment options, okay, which doesn't need to be like that, but you know that's one of my rules. Nothing about strength. Earnings at least 30 days. And then we got the auto climate where I'm going to start picky. I want the daily to become firm up and sensible. I want the weekly to be early. And ideally, I want to be close to the 9 EMA. That would be perfect. This is difficult. It's very demanding. And it's not providing any result. So is it because the volatility is a problem? So let's try known. No. Okay. What about the 9 EMA? No. What about the fact that the climate is early? What if we make it sensible? No. So that is not very good. That is not very good because that means I'm going to be trading climates. Let me see. Okay, interesting. Wow. Let me see. Where is the limiting factor here? Okay. Yeah. So the problem we're having is the sensible on the climate. I guess that if I was to scan for hopeful, okay, if I was to scan for hopeful, now we start finding some trades. And if I was to scan for late, I guess now we're gonna find more. Well, actually we didn't. Okay, so I guess that there are other climates that are up but not confirmed. So in other words, we are not having the right climate conditions in the stocks that belong to strong industries in the long term. Okay, what if we check medium term? Let's take a look at that. Okay, so it seems that with the medium we got more units. So let's go ahead and re-enable the climate to see if we got sensible climates. And we only got one, Procter & Gamble, that belongs to a strong industry in the midterm, not in the long term, okay? So that's better than nothing. Is that in an early stage on the weekly? That would be perfect. It's not, which hopefully means it's in a sensible stage. I would prefer to avoid, obviously, hopefuls. Huh. Look at that. So I guess it's either hopeful or late or not confirmed. Yeah, so the climate on the weekly is not confirmed, so it's not helping. Okay, so if I uncheck the weekly, we're basically relying on the strength of the sector and relying on the climate of that stock itself, and we don't have too much to choose from. So I'm just going to click on this and see the chart, and continue my analysis there. Okay. Wow, the entry just took place right there. It's, if we were planning this trade earlier in the day, it was right there, right there, right there. Okay. So anyway, so we have this here. Now I didn't check. Let me close this. We don't need it anymore. So I didn't check for the implied volatility of the options. Is that PG a stock that provides cheap options? Yes. So at least we have something good. The options on Procter & Gamble are cheap. That's the good thing. The calls are above the puts. The climate is in the beginning. The weekly is not a help. The industry is, okay, in the midterm. So it's okay. Okay, it's okay for us to go ahead and plan on this trade. Okay, so let's look at the 55-minute time frame and see what we get. So we got 47% probabilities. That is not good enough. What if we look at the 89? So it's loading. So we got 43, not good enough. What if we look at the 144? 47, not good enough. What about 233? Okay, so it's loading. We're gonna see that in just a moment. 51%. Okay, so that's good. And we got that UFO 141 to 139, which is lining up perfectly with that EMA. Okay, so the trade, would be wait for the stock to come to the UFO, and the moment the stock comes to the UFO, take the trade and go with it. Okay, now we seem to be far. It's currently trading at 142.71, and 141 will be the entry. Okay, so it doesn't make that much sense for us to plan the trade right now, because it may take a while. It may take more than 30 minutes that we have left for the stock to come back to the UFO, given the distance that we can see visually speaking. But indeed, it would be great to be able to see this happen, because that would be a fantastic setup. Actually, I'm looking at this incorrectly. Sorry for that, guys. I don't know how I did the math. I guess I thought I saw 142, because this is 141.83. That is actually right there. Okay, this is above the UFO. It's not, the UFO is not enveloping the EMA. So actually the setup is not valid. Okay, so sorry for that. I guess I read 142. I'm not sure why. So let me try the 377. And the 377 is not providing the 50% we need. So then we're going to pass on those time frames, and we're going to then observe the daily or the 2-day or the 3-day time frame. So on the daily, we got 62%, which is impressive for a daily time frame. But the UFO is located lower than that at 140.92, so it doesn't work. The 2-day time frame provides 62%, which is great, but the UFOs are much lower. And the 3-day time frame provides 66, but the UFOs are much lower as well. So unfortunately, while all looks good from a technical point of view, we are lacking on on-field orders in the right place to add more odds for the turning point to take place. And getting into this trade would be okay for me if I was planning on a hedge. But I am not planning on a hedge today. I want to catch the most precise entry point as possible. So I'm not just going to use the Elliott wave technique on a lower time frame or a breakout technique on a lower time frame to get into the trade. I'm not going to do that, because I am trying to catch like a proper trade, not a hedge. Okay, so in this sense, I'm going to have to look for other alternatives. So what do you do if you are in a situation, which, by the way, it's not that surprising given the fact that the market has moved so far. So we have very few stocks meeting the sensible condition, all of that. So what do we do if you don't find opportunities that match your rules for a directional trade? Well, then what you may want to consider is, instead of looking for a trade that is based on a very healthy climate, what you may want to consider, like we have done before, is to look for reversal signals and look for speed bumps of support in this case, because again, I'm planning for longs. So look for speed bumps of support. Okay. Now, if I'm looking for speed bumps of support, I want to look for long term, because I want to allow that market to fall nicely. Okay. So I want to allow this market to fall nicely. We may not have many or any, because the market has not been falling. So we'll see. I'm just reviewing all my rules here. Here we go. And from a climate point of view, I have it unchecked, okay? And as I have it unchecked, we have no results. So the question is, it's maybe the CIV spread that is basically, yes. So we have opportunities, but not with a positive CIV spread, okay? Which it's okay because we are trying to catch a stock that is falling hard, okay? So we got Twilio and Capital One Financial Corporation. The one thing I would like to see though with those trades, okay, and I'm going to use a volume map filter that was enabled for all of you guys using Top last week. So I would like to see the volume map showing an imbalance, and I'm going to start with the call imbalance, okay, on the current expiration date, or I'm going to check the next one as well if I don't have results. The reason why this could be important is because this normally tends to provide continuation in the move. So if we are in one of those speed bumps, and notice how Twilio, okay, let me load it. So Twilio is falling hard, but the volume map, okay, it's telling you 11.3 to 1, right? So with this huge volume differential, we are likely going to see a continuation of the move to the upside, okay? And by the way, max distance is supposed to be 0.88. It's currently 275, which means that stock, like, it's like, people believe the world is ending for that stock, which could be, but I would say it's unlikely, okay? And on top of that, we got UFOs right there. So let's plan our trade. Okay, so if we look at the 2-day time frame, for example, we have UFOs right there, 58% probability for those UFOs. So if we add the speed bumps, we are in the speed bump. That speed bump does not have any UFO. Okay, so what if we do the same with the daily time frame? The daily time frame has 48%, so that's not good. What if we do the 3-day time frame? Well, if we do the 3-day time frame, looking at that speed bump, okay, that speed bump coincides with that UFO, but again, price is not looking at that UFO. Price is looking at this one. Question: going back to the 2-day time frame, if instead of today, I was looking at this yesterday, so I'm going to rewind one candle. No, there was no UFO there. Okay, there was no UFO there. Okay, so here's what I'm going to do. I'm going to be cautious. Okay, I'm going to be cautious because the volume map is telling you, there is a high odds for continuation to the upside, meaning that we may see green UFOs any moment, but they don't exist. So then the trade I'm going to plan, I'm going to have to rely on the 251 UFO, right? I'm not going to, even though price is reacting to a speed bump, which is located at 288, the planning of the trade is going to be utilizing 251 as the strikes instead of 288, okay, because of what I just said. So how can we plan this trade? Okay, how are we going to plan this trade? Earnings are the cause for this huge sell-off, okay, which happened yesterday. The next earnings are going to happen all the way on February. Okay, so I will want to look at the February expiration in this case. So Twilio, we're going to be looking at, we don't have February expiration. We got either January or April, and April is a weekly expiration date. So I'm not too keen to do that because we may have lack of liquidity. So I'm going to look at January, which is the nearest we have. And when looking at January, again, we said we want to focus on 251. So then the first thing I'm going to do, okay, is I'm going to load something close to 251, which as you can see is 250. Okay, well, this is going to be a high risk trade because the difference between strikes is $10, and we're going to have to use 2. So that's going to make this trade to be $2,000 risk minimum. So while it's valid, I would feel that for some of you that are in practice mode, assuming $2,000 of risk in one trade may be too much. So I want to give it a shot at the April 14, because typically weekly expiration dates may have more strikes. But in this case, no, they don't. It's still $10 strike price increments. And liquidity, as I was expecting, it's worse. So I'm going to pass, guys. I'm going to pass because this trade is a trade that would have required multiple units. And the distance between strikes is going to be so much that the risk of the trade is going to be too much. But basically what I was going to do, just in case you want to practice, okay, yourself, so you see the setup, I was going to sell two, okay, 2 times, sell the put and buy the put below, okay, using that 250 strike. And in exchange for the premium collected, I was going to buy a call above. Okay, so you saw some trades like that before, isn't it? And if that move starts happening, so then you can close the put side, you can butterfly the call side, you can do all sorts of things afterwards for trade management, and it's a pretty good entry to catch a move on a stock that seems to be falling 13% down. So it's definitely buying low if you wish, even though low is not good enough unless you have speed bumps, UFOs, and things in your favor to turn that security in your favor. Okay, so Twilio will not be a good one. And if I look at the imbalance, instead of this month, we look at the next month. Do we have anything else? Well, COF does show imbalance in the next month. So that stock has been dropping hard. Okay, dropping hard. Yeah, so 192 is way more than 0.74. 2 is the probability we are reaching 2. So this is set to turn. On the 2-day time frame, there are no UFOs unless we get to 134. I am guessing that this is where we're inside the speed bump. If we look at the next speed bump, goes down there. There are no UFOs all the way to 134, so that 2-day time frame is not ideal. But look at, okay, yeah, no good, because it's only 46% probability on the daily time frame. What about the 3-day time frame? The 3-day time frame got UFOs at 140. So in this case, we may be able to put a trade together using 140 because, okay, from this pivot point, that speed bump is lining up with 140. So all of this is good, even though we are in a speed bump based on that particular low, which is where we are currently. Okay, so price may turn already from where it is, but I don't want to rely on where price is now. I want to rely on something lower, because lower is where we got the UFO. So 63% probability UFO, that's pretty cool. That's 140. This one is 135. This one is 147, but the probability is 46% only. So we are not going to do that. Okay, we're going to rely on the 140 UFO. And expiration date, in this case, we have January 25. Okay, so let's see what the option chain provides us with for COF. Okay, we got January 25, that's the nearest it gets. And then when it comes to strikes, I want to use the 140. Okay, we don't have 140, we have 139.4. Notice the strike price increments are $5 at a time. Okay, so that's better because I'm going to use 2 of the units. So, we're going to be risking $1,000 on this trade, which is still a significant amount, but it's half of 2,000. So I'm a bit more open to plan this trade. Let's see what's going to happen. Okay, so again, looking at, going back to the 2-day time frame. So we are looking at, 3-day time frame. So we are looking at this UFO located at 140. Because the UFO is located at 140, so we start by selling the 140 put, which in this case is 139.4. And then on top of that, okay, we are going to add the one below, which is 139. Okay, and if we do that, so let me clear. If we do that, if I sell the 139 and I buy the 134, so I collect a credit of 115. Okay, if I do it twice, my total credit is going to be 2.30. So the question is, what can I buy with 2.30 on the call side? Okay, and what you could buy is the 174. Okay, that's the one you would be able to buy. Okay, the 174 is the one you would be able to buy, but I'm not going to do it. Okay, because if I do it, notice what's going to happen. It's so far away that just think about where your target would be. So I believe the target is probably, so, oh, you know what? I was wrong. I didn't look at the price scale correctly. So if we go above this high, the target would be somewhere around 183. Okay. So yes. So if we buy the 170 something, 174 in this case, okay. So that's okay because now the option gets in the money before we reach target. So that's going to create some level of efficiency. And then when from a point of view of delta, so we get 23 delta. Actually, it's going to be a bit better than that because we are selling 2 and buying 2 of the put side. So that will create a total delta of 0.3, okay, with a total credit of 55. So if I do this trade, let's graph it. So if I do this trade, what do I have in my hands? So I have a trade with a maximum risk of 945, which is $1,000 minus 55 cents of credit. So that's 945. For me to get in trouble, the stock needs to get below 140. That's when I get in trouble. Current price of the stock is 151. Okay, 151. So in other words, from 151 to 140, okay, to be technical, it would be 139.4. That's good enough. So we're talking about $11 out of a $151 stock. So you need the stock to fall by another 7% for you to be in trouble. So you're giving yourself, a buffer there that allows you to be wrong. And if the stock starts going higher, so there'll be a moment in time where we will be able to act on the puts to make this trade to be risk-free and then work on the call to make it better. Okay. If the stock rallies, okay, and of course the stock rallies, to 183. So, we're gonna make, this amount of money, which is $1,500, whatever it is at that moment in time. So the trade setup makes sense. Okay, the trade setup makes sense at this moment in time. And the one thing I want to review is the liquidity. 415 to 435, 3 to 315, 176 to 184. So that gives you a spread between 54 and 56. So it looks like it's not too bad. Okay, it looks like it's not too bad. Of course, it's not the most liquid stock in the S&P, so you may need to be a bit patient to get filled. But it looks like it's okay. Okay, so in this sense, we're gonna go for it, and we're gonna place this order. And the beauty about this type of trades where you are selling bull puts to buy calls is that you could enter right now. You don't need to wait for price to come to a UFO, because what you're doing is that you're using the UFO as a defense, right? So that UFO there, that 140 UFO, is your defense in case that stock continues falling more. When it comes here, it's likely going to bounce. So that's your defense for you to not to be badly hurt on the puts, because remember, below that price point, that's when the losses begin. Okay, that's when the losses begin. So you are using the UFO as a defense mechanism more than as a precise entry, because you may not get that low. Okay, again, in a more perfect world, you have UFOs at the current price level, and then you can be selling puts at a closer level to price, and then the net result of this is that you get a greater delta. Okay, so with a greater delta, you profit faster. You could afford your targets to be closer. Okay, that's the good news. But in this case, because the target it's relatively far, 180 something, so to be honest, it's not too bad. And I'm gonna give it a green light for us to go ahead and put this trade in the Thinkorswim account that I'm using. Okay, so we are taking this trade right now. So trade COF using January expiration. Okay, it's gonna be a combination of things. So I'm just gonna right click. I need 3 rows. So I'm just gonna pick a butterfly, which is 3 rows. And then I'm just gonna make it custom, so I can adjust this to what I really want. Okay, so going from top to bottom, on the top, I'm gonna be buying a call. And on the bottom, I'm gonna be selling 2 puts and buying 2 puts. The strikes I'm gonna use, we said we're going to be 139 and 134.4. And on the upper side, we said I'm gonna do 174 4. Okay, so 174.4 right there. So let me bring top on top of TOS just to make sure I got it right. So double checking on the put side, it's 2 units. We're selling the 139, buying the 134, and yes, that's what I got. I got the minus sign, I got the plus sign, selling the 139, buying the 134. And then on the call side, I buy 1, and it's 174. Here we go. And everything is using January 21st. Everything is using January 21st. So yes, it's good. Real time, it seems I'm going to get 50 cents. Here it says 25. So hey, I'm going to try my 50 cents. Okay, and we'll see if I get it or not. And if I don't get it, again, just to have it in the account so you guys can see how I manage the trade during the life of the trade, I'll just force this fill. But I'm going to start trying 50 and see what happens. Okay, so I'm just putting the trade in the account there, 50. Okay, and I'll wait a little bit and see what happens. Okay, so questions, everybody? Again, in, let's say, easier days, okay, meaning by easier days where the market hasn't moved that aggressively in any direction, normally you get more stocks return that are close to an entry point or a market setup that is likely what you're looking for. When the market is more at an extreme, then those regular setups are more difficult to find, and therefore the alternative is to look for more extreme setups, which is what I've been looking for. It's a setup where we are looking for a stock to be, very, very badly hurt, has been dropping very heavily from 167 all the way to 151. And on top of that, we are relying on the UFO related to 140, which is even more extreme. So the trade setup, indeed, it's there, making a lot of sense for the trade. Cool. Now, we still got a few minutes to go. So now I would like to go back to basic scans. Now I'm going to look for bearish trades. So I'm going to start with top negative. I will not look for volatility yet for premium levels. I am looking for strong down sectors, looking for bearish stocks now. You guys let me know on the chat box, how is it going? If you are putting the orders in, you are doing some execution, you need support, you need anything, let me know. Earnings, we're excluding the next 30 days. And then from an auto climate point of view, so now we would like to see the auto climate to be confirmed down, and we want the market to be sensible. I'll play with a weekly later. Let's check first what we got. Okay, so if we do this, we have some candidates, so this is good to see. What if I add the weekly climate to be confirmed and early? That's a perfect world. Let's see. We got a few. Okay, what if I ask to be close to the 9 EMA? We got one. Okay, so that's good. And now what if I ask for the options to be very cheap? Okay, so mean less than 20. So options are not cheap in a nominal format. What if I look at implied volatility below 2 standard deviations of the historic? Yes. So yeah, Bristol Myers doesn't have expensive options. Okay, they are not the cheapest in the world, but they are not expensive, so that's a good thing. We got 51% on the 55, but we don't have any UFO close by. We are looking for UFOs located around 57.5. Okay, so we don't have that on the 55. What about the 89? The 89, we got UFOs at 58. We are looking at 57.5. So what about 144? No. What about 233? Okay. No, it's higher. What about 377? This is my last try with intraday timeframes. If that doesn't work, yeah, we don't have it. So I'm gonna move to daily and 2-day. So daily provides 49%, so it's not good. 2-day provides 61%, that's good, but no, there is no UFOs, around 57.5. And same with the 3-day, so we don't have UFOs. Okay, so unfortunately, we have a beautiful setup, but no UFOs with Bristol Myers. So going back to the matrix, looking for opportunities to short. Maka, what you were filled at 16 on KBH. You put a limit at 30, and on KBH. Yes. And you got filled at 16. Did you input that as a debit or as a credit? Because if you got filled at a worse price, that would be a clue for me to think that you bought what you were supposed to sell and you sold where you were supposed to buy. So please review that. You were supposed to sell the 37s and buy the 35. If you have a limit order and you ask for 30, with a limit order, you should get filled at 30 or more, not less. Yes, please confirm, Maka, if you were selling 37 and buying 35 or vice versa. It shows. So then I'm gonna suggest that you contact your broker, because this it's not something that should happen in your account, and you need to review what happened there. If you have a limit order where you were selling the 37, buying the 35s, and that was for 30 cents or more as a credit, you should get filled at 30 cents or more, not less. So, and errors on the broker side, you sold 37, you bought 35, and you sold 2 of the 37 and you bought 1 of the 35, correct? That, again, computer systems normally don't make mistakes. So it's either a glitch on the broker side, or maybe you made a mistake, which is normally what happens. It happens to me. It could happen easily because, again, it's multiple things. But if you are sure that you haven't made a mistake, then contact the broker and have a chat with them. Call their trade desk immediately. Okay. Okay. So looking for a shorting opportunity. Okay. So again, with Bristol Myers. Okay. What if we are looking for? We're looking for cheap options, right? So what if we look at top decrease in CIV in the last 5 days? Is still Bristol Myers. Okay, so we don't have anything else. So in other words, if I need to think of opportunities without any cheap option, okay, and wait a minute, it's giving me the same symbol. I thought I had more before. Confirm down. Let me review. Strong down. CIV spread. That's correct. That's correct. That's correct. That's correct. Oh, near the 9 EMA. Okay, that's the one. So if I uncheck that, okay, that's when I have more. Okay, got it. So let me do this again. Okay, so the early is a problem. Confirm down is good. And then cheap options based on top decrease in the last 5 days is giving me a few more. Okay, so what about Facebook? Okay, so Facebook is good, but the call as an average is above the put. Okay, what about Honeywell? Honeywell is good. Okay, Honeywell sounds good to me. The put is more than the calls. 4 out of 4. Slightly late in the climate. Okay, but we haven't exceeded max distance. So I'm okay to look at that. Now we need the right setup. So we are looking at 218. We need UFOs at 218. So far, they are located at 219 on the 55-minute time frame. So what about the 89? Yes, Maka, if you're using TOS, what could be very helpful for you is to use the chat rooms to connect with the trade desk. okay, and find out what happened. So we got a UFO there at 216. From 216 to 217, this is just a bit lower than the EMA, okay, so this will not be valid. What if we do 144? If we do 144, no UFO, 233. Okay, come on, come on. 233, we have UFOs way higher, and 377, way higher. Okay, so let's look at the daily and the 2-day. So the daily, no UFO, the 2-day, no UFO. Oh. Yeah, so I guess that bit of Murphy's law there. Back to the matrix, we got 3M. So 3M is just starting a down climate. Implied volatility for the put is greater than the call. All of this is good. So now let's find the UFOs. We need UFOs at 180. Okay, so let's find out on the 55-minute time frame if we have anything at 180. Not on the 55. What about the 80? Not on the 89. What about the 144? Not on that one. What about the 233? Hey, Mark, if you took the trade with, or you received a credit of 16 on KBH2, so you know there may be a problem there with TOS, guys. You need to contact TOS. This cannot happen. Okay, you have a limit order. You need to get filled at that price or better. Okay, feel free to email me, guys, and I'm happy to support you when you talk to them. Okay, based on what they tell you. So 377, looking for a UFO around 180. We got 182 there, so that's not good. So then we're gonna have to move to the daily today. So on the daily, no UFO. Sorry, on the daily we have a UFO, but it's only 48% probability. Okay. On the 2-day, no UFO. On the 3-day, no UFO. Okay. So hey, Murphy's law. Okay. So we just hit the top of the hour. Let's see, guys, if we try GLW and it works. Okay. Well, the fact is that GLW is a trade I would suggest not to get into. And the reason why is, first, the call is above the put, and second, we've reached 2 point something where statistics suggest 128 its max distance. So that stock got crushed too aggressively and is more likely going to rebound than continue to the downside. Also, from an Elliott wave point of view, you already reached the blue area below, which means that that full wave already took place. So planning to short now is basically too late. So I will pass. And while my goal was to get into a long and a short in this time that we have together, so in the last 30 minutes of the session, I only managed to find one long, which is the one that we got with, I forgot the stock, actually, COF. COF, okay, which, by the way, I haven't been filled. Okay, so this is the day where we got filled on the trade. Okay. Okay, I'll make this line. I just want to make this line thinner. Okay, got it. So so let's take a look at the prices. It shows us 41 now. So I tried to get it at 50. Oh, yeah, I didn't. I tried to get it at 50 and I did get filled. Yes, I did get filled. I didn't notice, guys. I was not looking at the screen, so I didn't notice I got filled. It seems that I got filled at 51, actually. So good one. So let me document these prices before we go. So I got 179 for the call. So for the call, I got 179. For the puts, I sold 425. And for the puts, I bought 310. Okay, so this is the trade we have. So I'm just going to copy this trade and place it on my positions. So then we can monitor and make sure our trade is under control, and we don't have it here. With all of this said, my friends, it's as always my pleasure to conduct the session for you guys. Maka, Mark, anyone else, if you're having issues with that trade and you talk to TOS, you got filled at 30 with KBH, Jeff, and you got filled at 51 with COF. So you got the very same exact prices as I got myself. So that's good. For the ones of you that seem to have had a problem with TOS, again, my recommendation is contact them using the chat service. Is probably one of the most efficient ways to do that, or you can always pick up the phone and call their trade desk. Definitely, that's the backup plan. You had 29 as your limit price. Yeah, so yeah, it's a very weird issue, but that's an issue. You need to talk to the broker, okay? Again, when they give you an explanation, if you want to email me, if you need to discuss anything additional to it, just count on me. Not sure I'll be able to answer immediately because of time zone differences and things like that, but for sure I'll make a priority to answer those emails as soon as possible because that's sensitive stuff, okay? You guys take care, my friends. See you on Sunday during the top session. It had a minus sign in front. Got you? Yeah. Again, talk to them, okay? Talk to them to find out. So see you on the Sunday session, guys. Keep up the good work and see you then. Bye, everybody. Take care.